Thank God it's Friday. Good morning and welcome to the Friday edition of Business Morning. Just before you get into the weekend mood, let's do 55 minutes of current and relevant business conversation right here on Business Morning. I'm Ini John Mekwa, and we get right into it, giving you what's happening in the global oil space. I'll just stay this way so you see the numbers, and we can tell you that oil prices extended gains on Friday, and they were on track for a second week of increases on the heightened fears of course, what's going on between Hamas and Israel in the Middle East and disrupting supplies from one of the world's top producing regions. Brent's crude futures climbed 97 cents to $93.35 a barrel. That's a whole lot. Yesterday at this time it was about $91. U.S. West Texas Intermediate crude was at $90.37 a barrel, and that's up 1.1%. The front month November contract expires today, Friday. So from next week, we'll be talking about the December features from next week, Monday. The more active December, that's the one we'll be talking about from next week, was at $89.36 a barrel, and that's up 99 cents. And then both contracts are on a back to post a second weekly gain as an explosion at a Gaza hospital this week, and the anticipated ground invasion by Israeli troops heightened fears of the conflict spreading in the Middle East. A whole lot is happening right there, and of course it's affecting price of oil and supply of oil. And Israeli defense minister has told troops to gather at the Gaza border on Thursday that they would soon see the Palestinians enclave from inside. I know that made the rounds yesterday. The U.S. intercepted missiles fired from Yemen toward Israel, according to Pentagon, adding to the anxiety about the broadening of the conflict. WTI prices could rise towards a high last seen in late September at $95.03 a barrel if it breaks resistance at $91.50. Oil prices are also supported by forecasts of a widening deficit in fourth quarter after top producers Saudi Arabia and Russia extended supply cuts to the end of the year amid low inventories, especially in the United States. And now to what's going on in the grain space right there. If we could have that grain there, you see we have wheat at the top of that. I can tell you that that's up 0.1%. So Chicago soybeans gained more ground on Friday with the market on track for a second weekly gain as a drought in the world's #1 exporter, Brazil, supported prices despite ample supplies from newly harvested U.S. crop entering the market. Unfortunately, the war on this side and then the weather on the other side. Wheat climbed and was poised for a third weekly gain. Corn eased, although futures were set to post a weekly rise. Looking at the fundamentals now, the most active soybean contracts on the Chicago Board of Trade, as we have CBOT right there, added 0.2% to $12.18 a bushel. And for the week, soybeans are up 3%. Wheat gains 0.1% to $5.94. For half a bushel. Corn, CVI, lost 0.2% to $5.04 for a quarter of a bushel for the week. Wheat was up 2.5%. Corn has added 2.3%. Once again, the severe drought that's disrupting grain shipments and slowing soybean planting in rival exporter Brazil has underpinned prices. Some grain shipments on rivers in northern Brazil have been halted due to droughts that has sent Amazon River tributaries to the lowest level in over a century. That's according to a note sent to clients on Thursday by shipping services provider. The El Nino weather phenomenon will last at least through the first half of 2024, according to latest United Nations forecast, with abnormal rainfall due across Latin America and raising fears for the agricultural sector. Almost half of Argentina's 2023-2024 wheat is in fair to poor condition because of lack of rainfall currently affecting core agricultural areas. The Buenos Aires Grain Exchange noted this, a 5% point hike from its previous report. However, the International Grains Council raised its forecast for the global wheat production in 2023-2024 season with upward revisions for Ukraine. Russia and the United States outweighing a deteriorating outlook for the crop in Australia. Let's come back home to Nigeria now. President Bola Tinubu has assured Nigerians that federal government is committed to eradicating poverty among citizens through consistent policies that will create wealth and lift people out of poverty. The president gave the assurance in Ikot-Ekpene, Akwa Ibom State, while declaring open a two-day retreat on fiscal policy and tax reforms for members of the 10th Senate.
House of Representatives and alternate
senators of the Federal Republic of Nigeria, led by its president Godswill Akpabio, the Speaker of the House of Representatives Tajuddin Abbas, and other top government officials at the state and federal levels are at the 4 Points by Sheraton Hotel in Ikot-Ekpene, Akwa Ibom State for a two-day retreat on fiscal policy and tax reforms.
This retreat will focus on fiscal policy and tax reform. Is therefore a clear demonstration of the commitment of the National Assembly not only to begin to grapple with challenges of economic downturn, but also align with fiscal and sectoral reforms, including designing an effective tax administration, which our able President Bola Ahmed Tinubu, GCFR, seek to unveil as part of measure to revitalize and rejig our economy.
Taking turns, speakers at the event are unanimous about its importance and expectation.
The diversification of revenue sources will not only boost our fiscal resilience, but also enable the government to better serve the people and address our most pressing need, especially lifting our people out of poverty.
In view of current economic realities, I consider this retreat very timely and its objectives well thought out. It once again underscores the commitment of the 10th Senate to making laws for the economic prosperity and well-being of Nigerians.
Godswill Akpabio, CON, the uncommon president of the Senate.
The president of the Senate, Godswill Akpabio, says the Senate is determined to make legislation to shape policies to improve the country's revenue.
We have not had the kind of elaborate plan that have been put forward by the current administration. That is why this Senate is engaged in this retreat. We must learn how to fix ourselves into that plan and contribute our quota towards the realization of the 8-point agenda of this government.
President Bola Tinubu, represented by the Minister of Finance and Coordinating Minister of the Economy, Mr. Olawale Edun, assures of a renewed hope for the average Nigerian.
It is unacceptable to him that we are quoted as having 63% of the population, 84 million people, defined as multi-dimensionally poor. And he cannot do this all by himself. It has to be a team effort. And of course, the legislature and you, the senators, have a key role to play.
The outcome of the retreat is expected to guide major legislative agenda of the Senate on fiscal policy and tax reforms, reposition the economic fortune of Nigeria.
Well, it's not just tax reform for President Bola Tinubu. Digital economy is also receiving attention, and that's why this morning we're going to discuss some of those innovations to push Nigeria's digital economy forward. And it's going to be a robust conversation today when we talk about the digital economy. But first, let's head to Abuja, where the Director General of the National Information Technology Development Agency, NITDA, Mr. Kashifu Abdullahi, joins us from there. Good morning, Mr. Abdullahi. Thank you for your time.
Good morning, Ini. Thank you for having me.
Yeah, so the world has gone digital. So if we have to do anything, if Nigeria wants to move forward, we have to do digital. And we do have a Minister of Digital Economy, but you are also a policy maker when it comes to digital economy. Talk to us about some of the reforms that we are expecting or we are seeing, and the expected results of these reforms when it comes to digital economy in Nigeria.
So 24th of October has been designated as the Digital Nigeria Day, and we are going to celebrate our success in the digital economy coming 24th of October to 26th of October. And under President Bola Ahmed Tinubu's administration, at the core of the renewed hub agenda are inclusive economic growth, productivity, and prosperity for all. So to achieve this result and realize this agenda, Nigeria will need to embrace and leverage the power of digital economy. Because according to Statista, in 2018, digitally transformed enterprises contributed $13.6 trillion to the global GDP. And it contributed $44 trillion last year in 2022. And it is projected to contribute $53.3 trillion this year. Therefore, digital transformation is key to the global economic growth. And the president has mandated our ministry to accelerate Nigerian economic diversification by enhancing productivity in critical sectors through technological innovation. So to achieve this mandate, our minister, the Honorable Minister for Communications, Innovations and Digital Economy, Dr. Bosun Tijani, unveiled strategic plan for the ministry. The strategic plan has 5 strategic pillars. Firstly, knowledge, because knowledge is the foundation upon which countries build a robust and sustainable economy. Secondly is policy, because it is based on the policy that enable environment we can be able to innovate and thrive in digital economy. Thirdly is infrastructure, which provide the backbone for the digital economy. And fourthly is about innovation, entrepreneurship, and capital, because innovation is the engine for economic growth, and that's what drives economic growth and prosperity in any sector. And lastly but not the least is trade. How can we trade what we have, especially our human capital? Because in Nigeria, our human capital is our greatest resource. So we want to position Nigeria as a global talent net exporter.
All right, so you said a whole lot of things there, but I would just like to follow up from here. At the just concluded IMF World Bank meeting, Africans were challenged to look inwards, because what the Western world, what the developed countries need are in Africa, and yet we cannot seem to use. For instance, you talked about the young innovators, the young people who have the brain, the human resources. What are the intentional steps? We do understand that we have policies, we do understand that policy statements have been made, but those do not automatically translate into action. Neither do they translate into the fruits. I mean, if you go to Computer Village here in Ikeja, you have a lot of brains, and some of them, because they are not used positively, they are not challenged to use their gift positively, they go negative. What are some of those intentional steps to meet up with these young brains? We have a lot of apps that can be created to solve Nigerian problems or Africa's problem. So what is different now, really? What are those steps to reach out to these young innovators and capture them into the system?
So talent is the human component of technology. And according to Conferi, by 2030, there will be 85 million talent deficit globally. All developed countries will have this deficit because of aging. And that deficit will result to $8.5 trillion unrealized annual value. You can see talent is a huge market, and aging is affecting talent in the Western countries. While in Africa and Nigeria, we have young population and we are naturally talented. So looking at this, we can position Nigeria to become the global talent factory. And also, according to PwC research called Nigerian Brands Export, the optimal path to developing Nigerian economy. The report analyzed the Nigerian talent and the youthful population and how we can position Nigeria to become global talent net exporter. So looking at this, the ministry formulated policy and design initiatives which were launched by the Honorable Minister, Dr. Bosun Tijani, on Monday. One of these initiatives is 3 million tech talent program. So we intend to train 3 million Nigerians on tech talents. And before starting this training, we have conducted skills gap assessment where we identified skills in demand globally and locally. So based on that skills in demand, we have identified 12 skills in demand locally and globally. Based on that, we are training our youth on these skills. And the program is designed to have 1.5 million work for the local market to meet our demands locally, and position 1.5 million to work remotely, means live in Nigeria but work for international organizations. That can also earn forex for us. So the program, we have launched it, and the idea is to create an ecosystem, not just to train people, but after training them, we connect them with jobs. The call for application is we are calling for the fellows, the people that want to be trained to register. We are calling for the training providers also to register. We are also calling for partners, development partners, subnationals, governments, state governments, and local governments to be part of it as well. Then we have placing organizations that place this talent with jobs locally and internationally. So the ecosystem will be created to meet our local talent demands, because every country needs to be digitally independent for it to survive. We cannot depend on any country to build our digital services and offerings. That's why we are training this talent. But looking at our youthful population, as well as the high demand for talent globally, we think also we can position ourselves to be the global net talent exporter, because we have the competitive advantage over any country in the world you can mention. Today, India is leading when it comes to talent export.
Okay.
But we have more advantage over the India in terms of our accent. We have better accent, we have better time zone, and we have younger population than India.
All right, Mr. Abdullahi, I believe this, we're going to hear more about this at your conference. I know you're having a conference, Digital Nigeria conference, that is on next week. I believe this will be part of the agenda.
Yes, the conference is designed to provide a dynamic platform to bring innovators, industry leaders, government officials, tech experts, and tech enthusiasts to come and network, connect, engage in conversation that can lead to policies regulations that can help the ecosystem to grow, as well as that can be a source of inspiration for innovators to bring their ideas to life. And it can also give us global visibility for the Nigerian ecosystem. We're expecting huge delegation from the international community, from the Europe, from the US, and Asia. So also it will serve as an opportunity for our innovators and startups as well to come and display their products and brands for investors to invest.
All right. Thank you so much, and we wish you the best. We certainly would like to see a lot of collaborations and connections, at that conference that will eventually yield some programs or application that will help Nigeria. Thank you so much for your time. Director General, National Information Technology Development Agency, that's NIDA, Mr. Kashifu Abdullahi. You're welcome back to watching Business Morning here on Channels Television. We're still staying on the issue we started, which is the digital economy, financial inclusion. In this case is what we'll be focusing on. And we have yet again from our Abuja studio the president of the Society for Agent Banking in Nigeria, and he's also a financial inclusion specialist, Mr. Shola Bickersteth. Joins us from our Abuja studio. Good morning, Mr. Bickersteth. Thank you for your time this morning.
Good morning, and thank you for having me.
Great. So I'm sure you heard the DG NITDA and talking about their plans and policy, how to capture especially the young minds and boost inclusion in the digital space. Are you impressed with not just what he said, but what you see and know happening around in the country?
Yes, it's important that when the policymakers are stating their intention, we, the followers, should also listen very carefully because we have a role to play in helping to realize what they are planning to do. The DG has stated very clearly that knowledge is the first pillar that they want to focus on for our youths and for the growth of the digital economy and for financial inclusion in Nigeria. That is very impressive. And of course, that is one of the areas that we also advocate for as professionals.
But are the youth really interested in this, or they are more interested in survival? A hungry man will hardly be interested in all of the English and digital and technology, So how do we get their attention to ensure that this is their priority at this time? Because stating it is one thing, getting it done is yet another.
Yeah, that's a very good observation. I'd like to start by what has happened in Nigeria over the years. Let us keep in mind that government comes and government goes. But when they come in, they always come with a policy. Now, 30 years ago, there was no bank called GT Bank in Nigeria. They were licensed in 2001. And of course, some young persons at the time, saw the opportunity and took advantage of it. And like they say, the rest is history. So many big banks today didn't exist 30 years ago. 20 years ago, the telecoms industry came and companies like MTN were licensed. And people were invited to become agents to MTN. Some people laughed at it and didn't see the opportunity. Once again, the rest is history. So many people have made a lot of money and so much employment has gained. 10 years ago, there was nothing called POS agents in Nigeria. CBN introduced the agency banking certification. And today, according to SANEF, 1.7 million Nigerian youths are being employed as what we call POS agents. So there's already evidence that those who take steps to take advantage will benefit, and they will benefit in a good manner. So we really shouldn't be discussing about what is we're going to gain immediately. We should be paying attention to the opportunity that is about to be created, and in another 10 years, all these conversations about digital economy, about financial inclusion, making poverty eradication a priority for the government, some people, some youths, and some business people are going to take full advantage of it. And of course, they will tell the story of how their life became better when this new administration came into place.
Yeah, but I mean, we also have some discouraging factors which would also discourage even the youths that are interested. Infrastructure is one of that. The DG mentioned that. It's a hurdle that has to be surpassed if we really want to, make the space as active as it should be.
Yes, you're right. There will always be challenges. That is normal. What we are saying is that in the middle of those challenges are the exact opportunities that we're looking for. Remember I mentioned telecoms 10 years ago, 20 years ago. In those days, it was a mirage that you could make call to practically everywhere in Nigeria. Now that infrastructure has been built and the rest is history. New infrastructure is about to be built. I encourage our youths and professionals and Nigerians, pay attention, rather than just complaining, take advantage, position yourself so that you can become part of the story of how your life became better when this new administration came. Complain, but take action.
All right. Well, you did mention the move when it comes to telecommunications. You talked about the financial sector. Fintechs now, are being run by really young people. What other opportunity do you see coming our way as a country? And it's not just about the youth. I think when you talk about financial inclusion, you talk about those at the lower strata of the economy. You talk about women also.
Yes. 2 days ago, I believe, the Minister for Finance mentioned that there's a comprehensive plan to make credit, palliatives, available to millions of Nigerians. He mentioned that biometrics is going to be used for that exercise. Some people are going to be employed for that exercise and are going to get paid. So it is not only the people that are going to receive money that are going to benefit from that distribution effort. Some people are going to, in actual fact, the first thousands of youths that will be employed are the youths that will go out there and make these palliative measures possible to millions of Nigerians, to 60 million Nigerians as they've promised. So, of course, this is now the time for those that want to take advantage to start positioning themselves. Now, about a month ago, the Chartered Institute of Bankers of Nigeria introduced the Agency Banking Certification Program for Nigeria. It's a groundbreaking certification. What does it mean? Now, remember I said that there are 1.7 million POS operators in Nigeria today. But there is now an opportunity for them to upgrade and become certified agent bankers. And of course, it means that they can start doing more than just giving cash to people when they need it. They can now be positioned to get involved in real financial services that will include, having access to palliatives, small business loans. They're not going to jump from one account to another. Somebody has to make that happen. So the combination of technology and knowledgeable individuals is what is going to really deepen financial inclusion in Nigeria. So there's an opportunity as of today for money advisors, experts, financial experts in every village in Nigeria. And those who take steps to prepare themselves and position themselves, for example, taking advantage of the Agency Banking Certification Program of CIBN, will be the ones to tell a good story in a few short months to come.
Yeah, so I like the fact that, because I wanted to ask you, you keep saying they should position themselves and to take advantage. So I wanted to ask, how do they position themselves? I guess one of that would be getting knowledge on your prospects, on where you want to head to next. But I hope the knowledge is not too expensive. That will also be a consideration.
Absolutely. So thanks For example, I speak as a financial inclusion expert in terms of access to finance. And like I said, the program that Chartered Institute of Bankers has introduced, they've been magnanimous enough, first of all, to reduce the cost of membership of CIBN, because they know that most of these POS agents on the field today, a lot of them just have school cert. So school cert has been made an entry. And then the membership fee has been reduced to as little as 5,000 naira. You know, so these things have already been made affordable. Most certification programs of that nature cost about 100,000. It has been reduced to 20,000 naira, so that every young person who sees opportunity in this government's continuous statement that, look, we're going to make credit accessible to millions of Nigerians, if they see that opportunity, they will upgrade themselves at minimal cost. We're talking of about 30,000 naira for something that would have cost 120,000. And then I will encourage communities as well. You see, government is not on its own. We have a church that came forward and said, look, this program sounds good. We're going to train 1,000 of our youths so that they can be in their village and they can help local people to access all these palliatives that we're just hearing in the news. Those are practical steps. So if you are a community leader, if you're a politician and you want to empower your youth, start with agency banking certification, because that is where the money is. Let us follow the money.
All right, thank you so much. We'll certainly follow the money. Very necessary. Mr. Shalabi Kestis, the president of the Society for Agent Banking in Nigeria, also a financial inclusion expert. Thank you for sharing those views and opportunities with us this morning. I do believe some people are watching and will follow up, you know, to take advantage of these opportunities. Thank you for your time.
It's a pleasure.
All right, so it's now time to, we're still staying in the financial today. Today is a money day, I believe, so. But now we're going to talk about Tier 1 banks. We know that ProShare earlier had shared of their findings when it comes to Tier 1 banks, and they made some recommendations. Now they have the second edition of their report, looking at some details of Tier 1 banks, how it affects you and your banking, your money in your banks. And so joining us to give us more about the second edition, she's joining us virtually, even though she's here in Lagos, Ademidun Shogo. She's an economist with ProShare, joins us from Omole in Lagos. Ademidun, thank you so much for your time. Good morning.
Good morning. Thank you for having me.
Great. So I remember talking about the first edition of this Tier 1 banks, and I know that ProShare had recommended that the assessment should be done more often, you know, because some banks have just been called Tier 1 banks, even when they're falling off that ranking, they're still left in that ranking. So tell us, what are your findings in this second edition, and has there been any action taken on your findings from the first edition?
Okay, thank you very much for the question. So I just want to take us to the concept behind the ProShare Banking Index itself. So we wanted to capture banks, classify banks based on the recent evolutions. We can agree really that banks have changed, they've evolved from what we used to have before. So we wanted to have a broader, a fit for purpose. We have a classification of banks under the current or the evolutions they have currently, because we believe that the extant ranking actually is premised only on the asset size. And we've seen banks change, we've seen their risk change, their structure. We are from the universal banking, now we have the financial old school structure. So we wanted to capture all those things. We did that in our first edition. And after we did our first edition, we got some feedbacks from key industry players. We also assessed it ourselves, and we decided to expand the methodology. So in terms of the expansion of the methodology, we had an introduction of some new metrics. So we have, in terms of efficiency, we decided to include efficiency. It wasn't included in the first edition. We decided to include it this time around. Using it, we used the metrics that is the cost to income ratio, to measure the in terms of how are banks optimizing the cost. We are aware of the inflationary environment, how cost is a major problem we have in terms of affecting the profitability of banks and also even in the business space generally. So we try to assess bank on that. We also introduce an integral part of banking now, that is the digital banking. So we've seen banks expand from the traditional way to a new modern way. So we decided to look at the e-banking income, that is the non-interest part, in e-banking income relative to their gross earnings. So what was the percentage of their income from digital income relative to their gross earnings? We included more metrics under the risk management. So we included the cost of risks. Before we had the capital adequacy ratio. We included that. In terms of governance, so we included we have the independent non-executive director to the board. We looked at the percentage. So we added more in terms of the methodology. We included more metrics. So that actually led to we have some banks falling off, and we have the re-entry of some of the banks. So now what we're trying to do is that we've standardized it. We've looked at it. That means that a bank which is being classified under the tier 1 and tier 2 is an holistic overview of their performance. It's not only based on one particular metrics. It's every key component of banking that is being vetted, and to see that these banks are really tier 1 and these banks are really tier 2. So that was what we did in this period.
All right, interesting. But I'm just wondering, what's the essence? When you're done with this report and your observations, do you talk to the banks? Do you talk to CIBN? So what do you use the report for? Or is it just out there for knowledge sharing?
Okay, so we actually engage with the industry players. We talk to the banks, so we get more feedbacks, reviews on also some of them. So the report sort of gives them it's an assessment of their performance. So yearly assessment of their performance. So it gives them that, these are the points where we need to work on. These are the parts where we need to improve. So that's the things that we itemize in the reports. We also give recommendations based on the report, to the industry, even to the regulators as well when we do this report. So some of the recommendations we made is that we talked about the CRR, that's the discretionary. We have cash reserve. We noticed that the statutory cash and the CRR is quite high now and is actually hindering banks from lending. So we made some suggestions about reducing so that they can encourage credit to the real sector of the economy to boost the economy. So we make some recommendations even after the report, showing them their assessment, their performance based on the year. And also it can also serve as as a drive for investors. Investors can look at the report. They can make decision. It can inform their decision about investing in any of the banks.
Yeah, I wonder if you engage the central bank, because when you talk of CRR and all of that, it's mostly from the regulator, the central bank.
So we just made recommendations. We engaged the industry. We made recommendations to the CBN, yes. But yes, we're just waiting for their feedback, yes. But we made recommendations under the report.
All right, so what next are we expecting from ProShare, a third edition? And then, of course, you have the issue of fintechs. They're also in the financial space now, challenging the banks and all of that. Do you consider them maybe in your next report or so?
So in this report, we talked about the importance of technology for banks. So we've seen the fintechs take that space so much, and they've been able to optimize it. So they have, in terms of deploying services, products that are quite attractive to the consumer, to the consumers, to the customers. They've done it efficiently. We saw it for instance, during the cash crunch. There was the fintech that came to our rescue. We had most of our traditional banks, apps had issues. So that means that they have to prioritize technology. So we made suggestions that they have to deepen their technology. The deepening of their technology helps them to give customer-centric product to people. That means that most of your product or services is in line with the lifestyle of customers. And also it helps them in the past of cost. You've seen the CIR, that is the cost-to-income ratio of banks, rise because of this situation. And we have the fintechs have been able to minimize the cost that they use in carrying out most of their core activities. So technology is very important for the banks. The banks have to prioritize it in order to change, in order to stay relevant. So we have technology is a metric that is going to stay. As technology evolves, banks will have to strive to continue to integrate it so that they can stay relevant and continue to stay relevant and continue to be in the business and not to retain their position in the business. And also technology has helped in terms of financial inclusion. We have the fintechs have been able to attract the unbanked. We have in Nigeria the percentage of people, the adults that are banked is around 47%. That suggests that we still have over 50% that are unbanked. We have the fintechs have been able to use numbers. We have so many products. We have their phone numbers to make people come into the banking system. So if we see banks follow through by making products that are very easy and accessible and convince people so that they can boost the confidence and the trust of customers coming into the banking system, that will be very essential for the economy and to help us drive the economy more.
All right, thank you so much. Banks have some things to learn from fintechs. Thank you so much for sharing your findings at ProShare with us, Ademidun Shogo, economist with ProShare.
Thank you for having me.
All right, let's move to the markets now and see how it performed yesterday at the close of trade. If we could have the numbers, there you have it. So it looks like we're starting with the fixed income space today, which we missed yesterday. But we have the federal government bonds that had 22 deals yesterday, valued at 14.26. We know liquidity is a major requirement here, but I think there was an auction on Wednesday. I hope we'll get our guest to tell us about that. April 26, 2029 had 11 billion naira after 11 billion naira after 11 deals. It's a 1 billion for every deal. Then you have June 2053 as well as 2028. So it seems like the long securities were attractive yesterday to investors. Let's see the Treasury bond. While that's coming up, we can tell you that the overnight lending rate contracted by 30 basis points to 1.5% in the absence of any significant inflows. Always looking for money in this market. And there's a Treasury bill right there. We see that it was a total of 12 deals worth more than 10 billion naira. The June 2024, it was 2024 day yesterday for the Treasury bills, as 6th of June 2024, 10th of October and September. That's when they're maturing, their maturity date, and they had 6, 4 and 2 deals there. And I can say that proceedings in the Treasury bond secondary market were bullish. An average yield declined by 2 basis points to 14.4%. Across the benchmark, the average yield contracted in the short security mid segment. Also, investors showed interest in the March 2025. Well, this is the open market. They had 6 deals, and December, this is really close, 2023 had 6 deals. Let's have joining us for this now, Bosun Bembe is our guest to give us an idea. Well, it's Friday, so we'll look at the week and talk about the auction. Hi, Bosun, good morning.
Good morning, thank you for having me.
Good to have you. So tell us about the auction on Wednesday. Was it oversubscribed? And then let's have a feel of how the market was all through the week.
Well, I will just start with the bond market. Or the auction happened on Monday. However, the settlement happened on Wednesday. So the GMO was offered about 360 billion on 2029, 2033, 38 and 53. So at the auction, what really happened was the stop rate on each maturity increased. So on the 20, most of the interest was on the 2053 bond. If you look, which closed at 16.6, which was quite attractive. It was like 35 basis point increase when you compare to the last auction. So post auction, we saw interest on the 2053, just like you show in your previous slide. So we had a lot of interest on the long end. As a result of this, so we saw the yield on that instrument declining by about 5 to 10 basis points. So it's currently trading at 16.5. 16.5 when you compare it to the yield in other instruments is quite significant and high. But DMO was able to raise about 374 from 360 they are set to raise, so which was an oversubscription, about 14 billion for what they said to do. For today, we still have a lot of liquidity. Like you mentioned, the stock overnight rate was 1.5. There are no significant funding activities happening. What takes out liquidity from the system is the FS, which we've not really seen a lot of things happening there. So we expect that the market, we expect some bullish sentiment, even this today and even next week. Interest will be on these on a short-dated instrument and like 2025, 2026.
All right, but so just before we let you go now, help us to connect this. The government, the federal government is supposed to raise, some of these bonds, federal government bonds, obviously. Is government trying to raise funds from investors, from the people in the market? Do we see these cash flows from investors? Do we really see it going to the government purse to help with development and funding of the budget?
Yes, we see that. But, most of this, we have coupon payment too on some of these instruments. Like this week, we had about 145 billion coupon payment, and we have about 251 billion coupon payment coming in next week. The ones that goes for to fund the budget, most of these funds were raised to fund budget. Like 2 weeks ago, there was Sukuk auction as well, in which about 350 billion was raised from that, which will be used for road construction. So these funds, there are ways in which government generates funds to fund the budget and to meet some repayment on some of the obligations that exist. Like next week, we have TB auction coming in. About 100 billion that will be on offer. However, we have a maturity coming in as well. So we have something maturing, then we have an auction happening. So no liquidity impact is just taking out, paying what is going out with another fund.
Yeah, obviously, when they do the coupon payment, then the money is leaving, and then we have a lot of federal government bonds. But anyway, thank you so much. We're almost out of time. Boso Bembe, our fixed income dealer with Access Bank PLC.
Thank you for having me.
Okay, let's move to the next market now, the final one for today. Excuse me. If we go to the crypto space now, we see that it's mainly green, unusual for a Friday, but it's a good one, So we see Bitcoin has recovered a whole 3%, 3.2%. I wonder what happened, This wasn't this good yesterday, 29,220.82 for Bitcoin. Ethereum also positive, 1.98 increase right there. In fact, it's green. I think we only have just a little bit of reds right here. Interesting, especially for a Friday. I hope we can get Olumide to tell us it's neutral in spite of all of that, because the market is coming from a very long place. If we can get Olumide to tell us. Okay, hi Olumide, good morning. Bitcoin added more than 3% in about 24 hours. What happened?
Yeah, it seems like Bitcoin is looking to break the $30,000 all important mark, and that's pretty much because of the forecast by many economic pundits that a spot Bitcoin approval is in play. That will definitely bring inflow of over $155 billion into the market and could propel Bitcoin to double in price in less than a year. So a lot of position buying is taking place, and the influx of liquidity is playing in. But bookmakers will also feel concerned that the US Fed chief spoke and highlighted yesterday that it still remains hawkish, and that inflation rate in the world's largest economy is still relatively high, and the US Fed meeting is just a few weeks away. So that could cap those gains. But right now, I think investors are much more interested about the narrative that a Bitcoin spot ETF is in play.
But do you see this can we sustain this?
Yeah, it's been odds betting against Bitcoin this year, despite growing legitimate concerns that the economy will tighten, interest rates remain high. I think what has helped the asset classes, the optics around institutional play, BlackRock, Fidelity, ETF, Fidelity, JP Morgan, these are trillion-dollar asset management firms that also look to be evolving around the crypto market. So it's really a sustainable move, but definitely there will be some setbacks pullbacks. But I think it's a fair call to say Bitcoin might break its all-time high at some point.
Yeah, but so, I mean, our highs, which we're looking at about 60 something, I know there'll be many setbacks before that, but then the year is getting to an end, and the halving is just next year, yes.
Exactly, and you also need to look at the fact that the amount of interest in Bitcoin is increasing. Banks are already taking part in the crypto market despite regulatory concerns, and we're also seeing interesting signs that new innovation around the space is also bringing much liquidity that a lot of players are looking at, despite the growing concerns about the global economy. Albeit the US dollar strength might cap that narrative.
All right, Olumide, thank you so much for that. Olumide Addition, a financial market analyst, sharing his views with us on the crypto space. All right, so that's where we draw the curtains on Business Morning for today. Thank you so much. We discussed a lot of opportunities, so you might want to watch the program again. I assure you, especially if you're a youth and you think you have something to offer or you need something, please do watch this program again on youtube.com/channelsweb. Today's episode will be very, very valuable to you. I'll be back at 1:30 for Business Incorporated. That's it. And Laddie Williams will be on tomorrow. That's why you're missing him today, 7 p.m. for Capital Market, where he will gather all the information from the market and share with you at 7 p.m. But meanwhile, just miss me for a couple of hours. I'll see you at 1:30. I'm Ini John Mekwa.